I didn't realize how close I was to actually being a pretty good penny stock trader when I quit the first time. So I reached out to a more veteran trader than myself for some guidance there. I was already 80, 90% of the way to where I needed to be to make a lot of money in OTCs.
What's happening, guys, and welcome back to another episode of Trading Takes. We have a special episode this week, and we have a guest who is near and dear to the IU community. But first, Sam is still away on vacation, probably touring the Alps somewhere, and so it is myself and Judah that will be hosting this week. And so to get on to our guest, we have Mr. Ed Berry. Ed, welcome to the show.
Hey, what's up, guys? Good to be here. Excited to get into this chat with you about trading. Always fun to get into those discussions, so I'm looking forward to it.
Yeah, definitely. And Ed, you and I had a chance to meet in Vegas, and we talked for a long time. We were both on a panel out there, and that's where I really got to know you and just see, you're just a really cool guy, super down to earth, very good trader. And we just wanted to dig into a bunch of trading topics, maybe get into some stories and a couple of life updates to see what you've been up to. So just for anyone who's not super familiar with Ed, he really made a name for himself when he went public on Twitter saying that he was going to take a $25,000 account and grow it to $100,000 within 4 months, as just to kind of demonstrate, his strategy to show that you can grow small to moderate accounts to larger amounts. So Ed ended up doing that in 47 days. It didn't take him 4 months, and he did it with remarkable consistency, like alarming consistency. And I think that that's really a testament to you, your trading, and your strategy. But before we get into that, could you just tell us, why did you do that? Like, what inspired you to kind of put yourself out there publicly?
I was just trying to show the IU members who were in my webinars that I was doing at the time what was possible, because it when you just go through individual trades, they're really small. It's not they're not big gains. They're quick. Most of my trades are very short, and I'm not putting up massive numbers on any one trade, but they add up. And over a few months there, add up to a pretty good amount of money. And that was all it really was. I didn't anticipate the amount of notice I was going to get on Twitter. Call me naive, I guess. It didn't ever cross my mind that Nate would retweet me so regularly, and that he has such a big platform on Twitter. So many people would see it and notice what I was doing. So I was a little surprised, to be honest. I wasn't quite expecting the amount of attention I got, but it was fun. And yeah, it did definitely go a little bit quicker than I anticipated too. I wanted to make sure I give myself enough time to feel like I wasn't forcing trades to get it done within the time frame. But yeah, I ended up with a good bit more time than I needed, I guess, to do it. But that kind of performance has been pretty typical of my scalping strategy for the last few years. Did get a little lucky with the market at the time. We got those wheat stocks, ACB and CGC at the time were both $100 stocks. And I did really, really well. I think that was the last week of the challenge. I got there really quick that week because of that. So, a little bit of good fortune. But yeah, I mean, it works. It's a very consistent style of trading. It has its limitations too. I can't scale that up to 4x $1 million account. It wouldn't work. There isn't the liquidity for that. I'd probably be asked to leave every broker that I have if I started trading that kind of size on those stocks regularly. So, it's scalable to a certain extent. It can provide a nice income. And I think we're going to get into, where I'm looking to progress to and what I'm doing at this point with the extra capital that needs to be put to work sitting in my accounts that can't necessarily be dumped into penny stocks at any given time. So, there's the limitations, but it's been really good to me. It's provided really good, consistent income for me to take care of my family for the last few years. It's been good. And I've learned a lot along the way, gotten a lot better. I mean, I wasn't green for 47 straight days a couple of years ago. I mean, I definitely took my lumps. I had some pretty nasty red days along the way. For the most part, these things don't halt up and halt down. You don't get in circuit to circuit to circuit, kind of blow up your account type moves, which is nice. But you can certainly get beat up pretty good if you're not experienced, you don't really know what you're getting into. So yeah, I had plenty of red days and a couple thousand hours of watching these things trade, taking the trades, studying the charts to get to where I'm at. So a lot of work did go into it, but yeah, it's been not exactly an overnight success, but I've had not too much downside, not a whole lot of notable drawdowns since I've started doing this. So that's been good. It's nice to not stress about that kind of stuff. I know it can be very demoralizing and very hard to recover from significant drawdowns. So another one of the big pluses to what I do. I mean, I just don't put on risk and don't hold positions long enough to take any outsized losses. So that's a little bit of the pluses and minuses of what I do. I covered some of this in the webinars and other interviews I did with Anthony. So I'm sure a lot of the same people probably watching this are familiar with who I am. So I'll shut up about it.
So most of what you were trading were like penny stock, lower float type of names?
I actually don't really care for the lower float ones as much. I trade them, but I do better with thicker names that have really tight spreads and pretty good liquidity, so I can move in and out without moving the price and get executed where I want to be out. So I can keep my risk pretty tight that way. It's an adaptation of the style of trading I was doing with OTCs when I got started.
And the building the account, was that like your trades, were they based off levels or were they based off dollar values? Like you made X amount a day, you were satisfied with that, and that was how you were building to the 4X?
I never think of it that way. I know some traders get to a certain point on the day or the week or the month and they just want to quit because they don't want to get back or think, all right, I reached my goal, so good day. I don't ever trade like that, though. I'll take as much as the market will give me. Like today was a really good day, and I traded a lot. I took a lot of trades today. There were some crazy moves. If you saw FFIE, that was in my wheelhouse down there. FCell, another one. A couple others that had really, really strong moves today. I'm going to take whatever the market gives me on a day like today. I'll just sit here from 9:30 to 4 and take every trade that comes along and just try to stack up as many gains as I can. And that makes up for the slower days. So there were definitely some pretty slow days, I think, in that 47 days there as well. There was one day I think I barely even traded. Every once in a while, there just isn't a whole lot to trade, and it's better to just preserve your capital. But yeah, I don't have a percentage or dollar target from day to day. Typically, I have ideas. I have goals in mind for what I'd like to do on a monthly, even a weekly basis. I have a rough kind of range that I want to be in every week, but more so monthly is what I pay attention to, trying to reach certain goals every month. And I know that will add up to the year that I want to have by the end of the year. So that's how I think about things.
Yeah, you're taking things one trade at a time, just trying to do the best that you can to execute on it. And I know you use a lot of level 2 in your trading, which might be a little bit different than a lot of other people who are trading even similar scalping strategies. But could you describe like how you're using level 2? And I know that you're talking about looking for big orders and kind of using that to backstop some of your stops. So could you just describe that process?
Yeah, that's it. So it's mostly trying to find participants that are bigger than me most of the time. And that doesn't necessarily mean a big order that's showing, because sometimes they don't. There might be a very small order taking a whole lot of shares, and I can just tell that there's hidden size there, and I'll risk off of that in the same way that I would a really large order that's just sitting out there. And that's the majority of what I use for my entry and exit signals, is just looking in the montage, in the level 2 and the time and sales. And I take most of my cues from that. I will definitely look at the daily charts, especially before the market day, like to see where something has come from, where it's at, in the bigger picture, and then I'll trade certain chart patterns when they form throughout the day, or even on bigger time frames. Certain key support and resistance levels I'll look for, and all those things help me to kind of form a bias of which direction I think a stock is going to go. And I only really need to know for a very short term time period where I think the stock's going to go. I don't really need to know where it's going to go in 2 or 3 hours or tomorrow or the next day. It doesn't matter. So I will form a bias that way, though. Just so it's good to know, like when a stock runs into a substantial longer term resistance area, there's a good chance that you might have a little bit of trouble pushing through that. It's good to know that kind of thing when it comes up throughout the day. And I'll put those lines on my chart sometimes too. Like Nate likes to do those horizontal lines on my dash charts just to remember where those levels are. And I do find that helpful. But yeah, like each individual trade, for the most part, I could probably just sit here with a montage and nothing else. And I'd probably make money most days. Because that's really the majority of where my signals come from. And so, yeah, I mean, I keep it very simple. I don't have any indicators on my charts other than VWAP. VWAP and volume and price is pretty much all I put on my intraday charts for the scalping.
Nice. And so could you give people kind of a range of like when you're in a name and say it's a dollar per share, are you looking for like a couple of cents, like 2 or 3 cents kind of scalping, or 5 or 6 cents, or just however much you can push it without hitting your stop? Or how do you think about how much you're trying to get out of a scalping trade?
I don't really. I will keep certain areas in mind if I think that there's a reasonable place where something's likely to stop or run into trouble in the direction that I want it to go. But really, I just kind of try to take good entries as close as I possibly can to the area that I feel like I can risk off of, and then let the stock do what it's going to do. And then I'll just wait until I decide it's weak, or if I'm short, if I decide that the buying pressure is increasing and it's stronger, and then I'll close my trade. I don't have targets necessarily, and I don't. It also depends on the ticker. It depends on the price range. Like a 30 or 40 cent stock compared to a dollar stock, they're going to have different magnitudes of movements. Like at a dollar specifically, actually, most of the time what I do when a stock gets exactly to a dollar, especially the ones that have been, like FCell today did it, that have been below for a while and have a really big day and they push through, I'll just try to get as many shares as I can comfortably take below that level, and then just kind of hold on and see how much I can get. I don't have the same kind of feel for them once they go over there and they start moving whole pennies at a time. It's not quite the same. It works out really nice every once in a while. I'll get a pretty big position in the high 90s or something, and they'll just go 2, 3, 4, 5, 6 cents really fast. Those are awesome when it works. But more often, what you get at a dollar is it goes $1 and 101, and then $1, 101, $1, 101, and it looks like a barcode, and it just does that, and then maybe it moves up 1 penny, and then it does the same thing again for like an hour. So they get to be more challenging and honestly less profitable to trade them in that price range. The ones that do really go after they break $1 are usually the thinner, lower float ones that are a little bit harder to size into before they make that move, but they're the ones that can really go 5, 10, 15, 20 cents really fast or more. I remember one last year. I can't remember the ticker, but it started below, I think maybe 60 or 70 cents. I think it was a sub 75 cent close, ran over $1 and halted like 3 or 4 times up to maybe $3. That's the kind of thing you're only going to get out of a pretty low float stock. So I'm not going to have massive size on something like that because it's moving so 2, 3, 4, 5 cents at a time below $1 too. So I hope that answers the original question. Anyway, it gets tricky around $1 specifically. I think my favorite price range is somewhere between 50 cents and $1. I don't like the really cheap ones all that much. Like FFI even was trading at 8 or 9 or 10 cents. Where usually I avoid those ones because they're choppy. they don't usually make the kind of FFIE was a very rare case today to go as far as it did. They usually don't make it that far. So a little bit higher price is where I prefer to stick to.
Yeah. So it sounds like, you're looking for stocks that are in play. Maybe they have a catalyst, maybe it's a theme, maybe it's a sector. You want something with probably above average volume. You want something that, there's something different about it right now that makes it in play. And then it's really, trying to form some kind of a rough bias, and then just having a precise entry, and then basically just worrying about your downside and letting the upside take care of itself. Is that a pretty fair characterization of what you're doing?
Yeah, I think that's pretty much nailed it. Yeah, that's about right. Especially when it comes to new tickers, like something that's in play today that wasn't last week. And then I have a few others that I've been trading almost every day for the last 2 months. Tickers that just always have enough volume and typically have enough range for me to pull something out of them. And those just, wallet patters, income stocks that I just know. I know the personalities of them. I traded them so many times. I'm comfortable with them. I know what they're going to do before they do it a lot of times. So I have a small handful of those type of stocks too. And then that absolutely very well describes what I'm looking for when I'm adding something new to the watch list that just hit my radar like in pre-market.
Great. And then so after you kind of did this challenge, you got out there, a lot of people, came to recognize you for doing this. You described your style, but you also tweeted recently that, you've been expanding your playbook and you've been expanding the types of trades that you're really looking at. And like you said, as your account grows and you're looking to put, excess capital to work, you've gotten more into swing trading or things like that. Could you describe like what type of swing trading you've been looking at? And, how has that process been going? Has it been more easy? Has it been difficult?
It's been hard, but it's enjoyable too. So with my penny stock trading, there's so many things that I don't need to know about what these I don't even know what some of these companies do. Sometimes I'll trade a ticker with not even a care in the world what industry it's in, like what the earnings look like. It doesn't matter. It's purely based on price action and feel, like 99% of it. But then when you're trying to, buy like a daily breakout or an earnings gapper in a higher price $50, $60, $70, $100 stock, there's a lot of things you need to know. And you need to understand what the earnings and sales growth looks like if you want to understand the fuel for that move higher. There's a lot more, I think, nuance to the technical analysis that needs to go into those purchases. And so it's been a big learning curve for me to pick up all these things that honestly I just didn't need to know before. So I don't have a ton of experience with, but I'm learning a lot. I've messed around with a few different scanning softwares. Just practicing trying to look at what has relative strength over the last, few weeks or a month or 3 months and try to figure out what are the strongest industry groups. And then out of those groups, then find the strongest stocks within those groups and then make a watch list of those and then identify key areas and technical setups where you might be able to get a lower risk, high reward entry that you can maybe hold for several days or weeks. That's quite a bit different than what I do with penny stocks. But I tried for a while to find something that was going to click with me the way penny stocks do. And I didn't find it, to be honest. I don't know if there is something else out there that's similar to what I do at all. If there is, I haven't found it. So eventually I came to the conclusion that I might as well just pick something that I actually want to do, pick a style of trading that might lend itself to the life that I want to live, and something that I will find interesting on a regular basis and enjoy doing. And that's how I settled on larger capitalization swing trading. It's worked for a lot of very successful traders for a very long time. Obviously, Judah can speak to that. That's the route that he chose, and probably maybe for some of the same reasons. There's comfort in knowing that I'm going to get there eventually. Like if I put in the hours that are required to get there, there's enough information, there's enough resources out there to figure it out. It's a lot, but I know that it works, and I know that it's maybe not in every market environment, at least being primarily long biased, but for as longer than I've been alive, people have been trading in this style and done well in the market. So that's what drew me to it, and also it is a little bit easier to execute those entries. I just put hard stops on them, and then I don't have to spend my entire day monitoring them and watching closely for small price swings. Like if I'm trading a large cap stock that there's like a 3 or 4 ADR kind of stock, it's probably not just going to it's not going to halt down like 20, and then it's not going to go circuit to circuit on me like when I'm not looking. I struggle with small caps for that reason, because I get taken away from looking at that to focus on like 15 trades in a row I might take in pennies, and I look back and go, damn, like stop that again, because it's very hard to stay on top of a significant number of trades that I'm taking every day to pay my bills, and then also trying to be really fully focused on intraday, especially small cap type intraday trading. I found it to be a lot. It was kind of overwhelming, and I would just get frustrated on both ends and make less money doing what I am good at, and then also lose money doing that because I wasn't fully focused on either one. So with the swing trades, I mean, a lot of the entries I end up taking pretty close to the open, and then I just put a stop at low day and just let it go and see how it works out, and then take note of that, like save the chart, save my, keep track of my trades and see what's working and not working, and see what I'm doing well and not doing well. And I can assess all those kind of things outside of market hours, and I can do all the scanning outside of market hours to try to find the trades that I want to take. So it's a lot of extra work outside of my regular market hours, regular trading hours, but it also it allows me to do it. It's easier to find extra time outside market hours than it is to squeeze more stuff into the 9:30 to 4.
Yeah. Also, like you went from basically scalping these like 50-cent dollar names to like swing trading overnight, and it could be multiple nights on like larger dollar type of names. So like that transition, like how long did it take you to be comfortable with that? Because a lot of people want to be 100% cash every night. They're happy coming in, making what they make, and then just like ending it there. Whereas, you could be up 10% today on something, and tomorrow you could be down to your stop. So like, how'd you switch over to something so drastic?
Yeah. I mean, it's, for whatever reason, it hasn't bothered me. I'm holding a couple things right now that I barely even looked at today. My stops are still there. They didn't get hit. And like one of those things I'm holding right now is Citigroup. Citigroup had a nice daily chart. It had a kind of a small breakout. It's nothing crazy, but it's not a fast moving stock. It's not going to gap down 20 or 30% on me tomorrow. Like earnings are out of the way. They're not going to report bad earnings in the near future. I don't know. Like I'm not uncomfortable with that. Some of the other ones I've traded are a little bit wilder. Like I traded ARM, and it was the first earnings play that I traded, and I didn't know what I was getting into. So I bought it at 95 because there was a big offer there right at the open, and it was getting chipped aggressively, and I was like, oh, I know this price action. Like I see this, so I just bought it, and I ended up with a low somewhere in the 95s average. I just market bought it. And within a couple hours, I was up like $30 a share, and I was like, "What the hell do I do with this?" I don't know, because I've never held something like that. I've never been involved in a stock for a $30 a share move before. So I reached out to a more veteran trader than myself for some guidance there, and I was happy to help. And I did what I was supposed to. I sold some in the 120s that day, and then moved my stop up and trailed, with the 10-day moving average. And I think I sold the rest of it like in the 140s. So it actually worked out fine. It was smaller size. It wasn't anything crazy. I'm not going to retire off of my earnings EP trade, but that one was wild. That one had some pretty big swings in it, so that one was a little bit harder. I was a little nervous about holding that one overnight, especially after it was up so much on that first day. But it did close kind of weak from what I remember on day one, so it wasn't super carried away like into after hours or anything like that. So
Yeah.
I think it got down and it flushed early the following day, which they shook me out of some of my shares there. I got nervous, but all in all, it was a pretty good trade. But that one was a little wilder, and I'm sure that's really where I'd like to get to. All right, I'm trading slower names right now just to get used to taking a certain percentage of my portfolio position, putting it in this setup that I think makes sense, and just trying to get into kind of a rhythm with holding positions longer. And it's easier to do that with the slower moving stocks. And I'll make less money, right? The ADR on my portfolio right now is probably pretty low, but that's okay. I'll work my way up to the faster names at some point. I mean, that's where I'd like to get, because that's where more aggressive account growth comes from, the faster names. But for right now, it's still pretty hard. It's challenging for me to hold those high ADR names. I don't feel comfortable when they, have big swings, and massive swings in my P&L kind of make me uncomfortable. I'm not used to that. So it's definitely a big adjustment there for me to. And then, like you said, I've had several really good entries that I held overnight, and then they gapped down and stopped me out the next day, and it was so frustrating because I think it's so easy to look back and go, well, I should have made it a day trade, and I had a nice gain at the end of the day. I should have just taken it, but that wasn't the plan.
A lot of times though you can, like that's the thing. A lot of times, you like you're gonna eventually, when you get to that stage of taking those higher ADR names, there'll be times where the daily looks great, but the thing just moves 15-20%, which is like an unbelievable move in a day. And like you have to know that this is something that you should probably take a little bit off, whether it's a third or like even a fourth or even half of the position, and then you let the rest ride. So like, yeah, initially you want to come in and you want to swing trade it for days, or like at least a day or two, but like some things they just move so much that you're like, all right, I'll peel a decent amount off, because like especially now these past few months they've been like tons of 18-20% movers off of good dailies or hourlies, and then most of it gets given back, and then it takes like a few more days to push higher, and like you'll come to feel like when you should be selling. Like I think like swing trading, at least for me, it's okay to take some off the day one, even though you're swinging it, because the notion there, a lot of people just think like they're gonna hold it. Maybe they'll go 40% and double and do more, but it's like you'll be a lot more comfortable, taking it off. And there's so much out there that like you could use that to put it somewhere else and just keep like rotating. It's like an active, even though you think you're swing trading and it's slow, it's an active thing. Like I'm sitting here all day, even though I swing trade. Maybe I know a lot of others people don't do that, but like I'm constantly like rotating things and like just moving things around, even though I'm swing trading.
Yeah, it makes a lot of sense. I appreciate your insight on that too. I mean, I have a lot to learn from you in this space for sure. So,
Yeah, I think one of the cool things too is that like as you do blend styles, you know, you can draw from different things, like the strengths from different styles, and apply it to another. Like even though like they might seem very different, like scalping and swing trading, like you guys were just discussing, if you're kind of working a position in order to lower your risk, or take some off the table, that's a part of a process of swing trading. And like for myself with options, like you're talking about, adjusting size and things for volatility, like that's, you have to completely do that in options. And like, let's say if I have a weekly options position on something, and if I'm able to make it free or take half off, then I might turn it into a swing if I have high conviction on it. But if I don't have that kind of padding, and if I can't really control the risk, then that's something where I won't hold it overnight then. And so it's nice to be able to just draw from these different styles and like get tips and tricks and talk to people and really like come up with a custom blend of your own, depending on like what you're trading, how you want to trade it, what you're comfortable with, and the learning curve. So it's really cool to hear kind of different styles coming together to talk about those things.
Mm-hmm. Yeah, I've also been recording the tape on a lot of these, especially near the open, because they're so rangy, a lot of them. I guess like anything else, a lot more volatility in the open and everything. And trying to see if there's places where I can maybe apply the tape reading skills that I've developed to kind of narrow down my entries a little bit, and kind of also while keeping in mind the risk reward that I want to try to accomplish, and like the history of all the charts that I've studied up until now, what these things like to do, and then kind of keep in mind like a target of where I want to try to get involved, and have a setup, but also see if I can't maybe improve my entries a little bit that way. But I don't know. So far, I think it's better if I just stick to having pretty sound buy and sell rules for the most part, and maybe work in more discretion as I get more experienced.
Yeah, definitely. And something that we've been asking the last couple of guests who have come on Trading Takes is, people have been talking about bringing the 24-hour market to stocks, and I think that would, impact a lot of like swing traders potentially for the better, or maybe not. But if you could have basically a stop 24/7 on something, that could bring a lot of peace of mind to people who are not comfortable, with a potential gap down or gap up. But on, at the same time, if you have very like low volume after hours trading, you could have some, stop hunts or do something just, are swiping things up and down. So what's your take on 24/7 trading? Do you think that would help you, or?
No, I don't think so. So like if it was the same regular liquidity and volume as the rest of the trading day, extended, and maybe if they extended the actual trading day, that might be beneficial to me. The actual like high volume and liquidity trading day where I can make money. But if they're just extending, if it's just more low volume, low liquidity, spready after hour, like extended hours trading, that certainly doesn't do me any good. And I think you're right. You're probably going to get some pretty screwy moves in a lot of things at 2 or 3 o'clock in the morning when most people are sleeping. If the market's still open, yeah, I don't think I like the idea of it. I like at times I thought, man, it'd be so nice if there was something, if I could do something after 4 o'clock that I was just as good at as penny, that I could just keep trading. Some days I don't want to stop. I would just keep going all the way till 10 o'clock at night. Like today was one of those days where everything was just working. If I could extend that all the way till midnight tonight, I would. And then I'd sleep half the day tomorrow. But I don't think it would be like that. I think it would very likely just be more of the same, like low liquidity after hours type environment that is already, I think there's already more than enough going till 8 p.m. I don't see really a reason to extend it. But that's just my take. I don't know. Maybe it would be beneficial for some.
Yeah, I know that when you and I were talking in Vegas, you kind of shared that sometimes it's difficult for you to step away from the desk because you're so consistent that it's like an opportunity cost, and you kind of know, like, you can make a certain amount or you pay your bills or do whatever, and it's been difficult for you to kind of just take a day off or to do things. Have you worked on that at all, or is it still something that you're struggling with, or?
Define struggling. No, I'm not. I haven't gotten too much better at that, to be honest. It's been a long time since I went on vacation or really unplugged without a laptop. Like we've taken trips over the last few years, but I always have a laptop with me. And there was a couple of trips where I not only had my laptop, but multiple 27-inch monitors set up in the vacation rental house. And then I'm trading from like 9 till 11, 11:30. And sometimes I remember one occasion where I was having a really good day and I really didn't want to stop. I had to walk away because, we went there to spend time with the kids and get out of the house and do stuff. But, yeah, I suck at it. I've been trying to talk my wife into traveling to the West Coast so that at least I can get up early and get the trading in before everybody's ready to go out and do stuff. We still have the rest of the day. Like maybe I trade the first 2 hours and I'm done by 8:30, and then we can go. So that kind of trip sounds good to me. We haven't done it yet, but we've been looking at Arizona. Maybe when it cools down up here again, maybe head down there. Southern California, maybe. I don't know. Someplace nice and warm when it's cold and snowy up here.
Yeah, I'm envisioning you like in the Bahamas, like on like a raft, just like monitors all over the place, just drifting in the ocean. But yeah,
I'd be happy. My wife wouldn't like it, but I'd be happy.
I think that that's the thing. So many traders, they actually enjoy trading a lot, and you know, there's been conversations about like, is it partly the dopamine? Is it partly just you find it so interesting, or is it a combo or anything? But I think a lot of traders have a difficult time stepping away. So, Judah, do you have a difficult time stepping away with the straight swing trading, or do you think that that's because it's bigger picture moves? You don't feel like the same FOMO if you're not at the desk.
I still do. I still do because I'm not looking for something that's like an amazing, like that amazing of a company. Like I'm looking for anything. It could be very volatile, and like I still want to see that action intraday. Like I'm still interested in how the things move. So like, let's say for example, last week, like you're swinging GME, right? Today we're filming. It is the 14th of May. Okay, you're trading GME last week because it broke out of a flag, and it's a good daily setup. Nothing great of a company there, but the action that comes in Monday morning when we had that over the weekend tweet, like you want to be there just watching it all day. So like even though you're a swing trader, a lot of the things that you take you may not be like something that's just going slowly. Like these things are still volatile a lot of the times, and like I still want to be there and watching that action because sometimes I'll exit a trade early because I just have this certain feel that it's not going to continue, and that saves me also. Instead of letting it ride back down to my stop, I get out. So like I'm not doing anything anyway. Like I'm young. I'm not looking to end my day at 2 p.m. and just like this is my job and this is where I want to be throughout the entire day, even if I don't do anything um, trading wise. I'm happy to be here watching how everything moves, and like that's just to each their own. But yeah, no, I enjoy being here all day.
That's good. Yeah. And Ed, so you're a very agreeable guy. You're super fun and easy to talk to. What's a controversial opinion that you have? What's something that would make a couple people upset potentially?
Man, I thought about this today, and I don't know if I have one trading related. Maybe not controversial, but maybe a sadly undervalued opinion of mine is that it is very useful, and I think, at least for me, necessary to have motivations outside of money in my trading. And, eventually, yes, it comes down to money because um, that's the only measure of success in trading, really, is your P&L. But it's more than that. Like I didn't get into trading to make $100 million and buy a couple of Lambos. Like I'm just trying to provide a good life for my kids. That's what it comes down to for me, and I keep them in mind when I'm sitting here grinding away. And some days I don't really feel like grinding it all the way out to 4 p.m. But I always do. I never take days off, and I rarely even take time off during the market day because it's just that's my mission. Like it's more about what I can do for them. And then when I'm off the desk, that's my main focus as well, is doing everything I can to be the best dad to them and do the things that are important for my family. And I'm trying to build a life for us, more than I'm just trying to get rich and buy fancy things. I mean, I like nice things. I like fast cars. A couple months ago, back in I want to say like November or so, shortly after Traders for a Cause, I went out there and I got the chance to drive a Lambo, and then I went out with my son and we test drove a couple of really nice cars, and he was bored. He didn't care. He was like, "Hey, are we almost done? Can we go to the Lego store?" I was like, "Okay, yeah, we're done." Like I thought it'd be cool I thought he'd be really excited to drive some fast cars around. I even let him sit in the front seat for one of the test drives. He didn't care. It doesn't matter. All he wants is my time, and he wants to play Legos and do the imaginary things, use his imagination to play pretend all these different ways. How much money I make doesn't matter to him. He doesn't care. So all that matters is that I'm there when he needs me to be there, and we have enough. So I'm motivated more by those kind of things than I am how much money I can accumulate. At least for me, that's been a better motivator, because the first time I got into trading, which I think I discussed this with Anthony, but if I didn't, I had 2 tries at trading. The first time was in my early 20s, and I put a lot of hours into trying to learn to trade penny stocks, and I got pretty good at trading these penny stock promotions, and I was slowly, actually not even that slowly, pretty quickly growing the account that I started with a very small amount of money trading penny stocks. And then the SEC went and shut down all the penny stock promoters all at one time, and they were dead for a while, which is the nature of penny stocks. And I moved on, and I came and tried to learn other styles of trading, and I got frustrated, and I quit. And my only motivation at the time, because I had a job, I didn't need the money necessarily, but my only motivation was to get rich. I wanted to make a lot of money, and I wanted to have a really nice house and a really expensive car, and I wanted all these things. And in the end, it wasn't enough motivation to keep me going through it. And which was a shame, because when I started trading again back in 2020, I was already 80-90% of the way to where I needed to be to make a lot of money in OTCs. I just didn't know it. I didn't realize how close I was to actually being a pretty good penny stock trader when I quit the first time. And it's too bad, because there was a really nice penny stock market in those interim years that I wasn't trading, because I given up on it. And I regret that, but it is what it is. It's it's behind me now, and I'm never going to do that again. There's not going to be a day that comes where I'm going to quit on trading, no matter what happens, because this is what I want to do. This is what I want to do for a living. I know that if I just put in the hours and I keep working until I get it right, I'm going to get it. But I didn't have that motivation the first time, So you guys, neither of you guys have any kids yet, I don't think. But hopefully one day you do, and you'll understand what I mean. I don't mean that to be condescending. And so, some people, I don't want to be offensive to people, because people that don't have kids, you don't understand. Yeah, it is hard. It is harder to have kids, but they're also a driving force behind everything that I do. So at least for me, and I think I'm not the only one that has found having a family and having kids to be a very powerful motivator, and having, good, honorable goals for what you want to do with your trading outside of just amassing a fortune is also good.
Yeah, I totally agree with that. And I think that, yeah, whether people have, kids or not, I think a lot of people are trying to do trading for their families and, to build a better life and to do those things. And that was a very powerful story, what you said about your son just kind of wanting to, just wanting to spend time with you. And it really makes you think. It's like so many people just focus on so many secondary things, or like, oh, if I only had this, or if I only had that. But like, really the best things in life are just the people that are close to you, and that. So that was a very touching story. And I'm sure that changed your perspective a little bit, too, to kind of like reprioritize, like your attention sometimes, where it becomes between just like being at the markets or being able to spend a little bit of time with your kids. Because I know that Nate's had a similar kind of experience where that's really what he's trying to prioritize after all these years now.
Yeah, I mean, it's tough at times, because I haven't reached that kind of level of success. I'm not, I have to. It's a fine line for me between how can I put in a bunch of extra hours to try to build my trading career so that we can, give me longevity in the market, so that I can always continue to do this, but also not put in 80, 90, 100 hours a week and never see the kids. So what it comes down to is just how early can I get out of bed? So, because I can beat them out of bed, and they're not going to see me too much in the morning anyway, most days. So the earlier I can get up, the better. I can get in the extra hours, and then when I'm done, I'm done. And I try, really hard not to be on my phone at night when I'm with the kids, and try to give them quality time, not like halfway there kind of distracted time, which is very easy to do, because there's always something happening in after hours too, and there's always something interesting going on in after hours, especially in earnings season. But yeah, you gotta. That's what I said that I was getting into this for, right? Like my intention was to build a better life by making a good income, by making more money than I was before, but also to have the freedom to live the life that I am trying to build, not just be glued to the screens all the time. And, sometimes I have to be reminded of that. My wife likes to let me know when I'm getting too carried away with the hours I'm putting into work. And lately I've been getting off the desk a good bit because the weather's been really nice. We've been getting outside a lot. And tell you what, I'm trading really well too because I'm not overworked at the moment. Like I'm taking more time away and just being really focused when I am here, and I'm not making any less money because of that. But it's so easy to get caught up in all the work and forget that. Like for several months when it was cold outside and I didn't really want to be outside anyway. It gets very easy to just grind and just keep going, and keep working and keep working. But it's good to get off the desk and keep the more important things in life in front of you.
Definitely. And we kind of have a running joke on this show of Judah and his future wife. And so maybe we can add future kids to that list too, of your motivations and your strategy, Judah.
We will.
Yeah. And then Ed, what are a couple of the tools that you use for your trading? Like what's indispensable? If you could only have a couple of them, what would you really focus on?
I only have a couple. I use DAS. DAS is almost indispensable for me, and I found out just how valuable it is to me this week because my primary trading account was at TD Ameritrade, and I just got moved to Schwab this past weekend, and DAS is still kind of screwed up, and it's not working right, so I've had to use Thinkorswim, and man, like it's fine. I'm doing fine. But it's just uncomfortable. It's not, you like what you like for a reason. Like I'm very comfortable in DAS. I have everything set up the way I like it. I like the way I can execute my orders. And it's been kind of a little bit of a tougher week for me just to execute so far. But I love DAS. Scans I use for my pre-market and intraday scanning. Although I wouldn't call that one indispensable. There's other things like Trade Ideas works, is fine. I don't use it as much just because I'm like a creature of habit. I'm just used to scans. I remember a few years ago I started finding stuff on there that other traders were using Thinkorswim scanners, and there'd be like one ticker here or there that would show up in mine, and for some reason or another wouldn't show up in their scans for basically the same kind of tickers. And that justified that couple of, that 1 or 2 days here or there where I made a bunch of money on that ticker that was on scans, justified paying for it every month or every year. I just do the annual thing, and it just like takes care of itself. After a couple of those, if you catch something that someone else didn't, then it pays for itself. But I don't know if I really need to have it. I'm not sure if I'm going to continue it when it runs out. I think at the end of this year. I think I did it around December because there's just so many things in IU that Max has put together. There's a bunch of scanners in there. I do use the Momentum Burst scanner a lot. That one's really good for finding stuff that was not on my radar before the market opened. Like for most days, most things I'm going to trade, they're going to be on my screen at 9:30 already, or close to 9:30. But every once in a while, something has news or something starts running at 1, 2 o'clock in the afternoon or something. I'm not necessarily going to see it in my scanner right away because I have it sorted by volume. So the Momentum Burst catches that kind of thing that has massive surges in volume real quick in a short period of time, and then I can pull that up. So I like that a lot, and I probably will end up just switching to just using all IU scanners, or maybe Trade Ideas because it's free with Centerpoint. Outside of that, I think that's about it. Those three things, DAS, scans, and IU, is about all I use on a regular basis. I have been working with Deep View for the swing scanning, because I can find they lay it out in a really nice, convenient way with all the earnings, EPS and sales, and a bunch of statistics about the stock all there in a really nice, easy to read format that I like. So for those, I've been using that software, but yeah, I think that's it.
Great, yeah, and I know that Lance just recently had a tweet kind of asking what people use for their scans, and We were pleasantly surprised to see how many comments had just investors underground, and tagging Max in it, because the amount of work he's done over the last, year and a half, 2 years to have all those breaking news, tape bursts, AI scrapers, trend. It's crazy. So yeah, that's great to hear. So we're going to head into the next section of the show where we talk about who won the contest from last week. And then we're going to get into some other questions. So basically the contest is leave a takeaway or a key take from the episode and just leave it in the comments. We just want to interact with our audience and we want to hear from you. And so the winner from this week is Whiz Bang Trading, and they said stress just ruins everything. And that was from the last episode when we were talking with Scott Manzo, and he was saying that if it came between having a very stressful strategy or one where you could make slightly less but you had a better quality of life, that he would take that every single time. So Whiz Bang Trading, good job with that. And you have won a free t-shirt. So we're starting to give away Trading Takes t-shirts, and so every week we will pick either one person or even a couple of people for that. So make sure that you leave a comment and a key takeaway. So getting into the questions, the first one: what has been your best purchase recently for under $1,000?
Oh man, I hope my wife doesn't see this, but I would say the new vacuum that we just bought, because I can't tell you how many times I heard her complain about the one that we had, which was not a cheap vacuum. It was a really nice vacuum, but apparently it broke down over time. And now I have a brand new one. And I don't have to hear about how much the old one sucks anymore. So that, or probably whatever the most recent, really expensive Lego set was I bought for my son, because those are always a blast. I suck at playing Legos. He likes to create stories with all the little characters and stuff and play it out, and I'm terrible at that. I don't have the imagination for that, but I like to build them, and the bigger the better. And we've gotten some pretty cool ones with thousands of pieces in them. So those are a lot of fun. I don't know.
Love it. Vacuums and Legos. Last week, Scott said he got an ice machine that gave him like this glacier, crystal clear ice for his drink. So we're building up quite the inventory of good purchases under $1,000. And the next one. What is the best habit that viewers can implement starting tomorrow?
Oh man, cut your losses quickly. I think a lot of people tend to have much more patience with their losers than they do their winners. I would say, and I found myself doing that initially. It's hard. It goes against your natural instincts to do it. When you're wrong, you just have to be wrong. No one likes to admit they're wrong. They don't want to take the loss when it's small, and then it becomes a big loss. But big losses always start out as small ones, right? So if you keep them small, you'll stay away from the kind of stuff that blows up your account, and focus on letting your winners go longer. That's hard. I really struggle with that with ARM, and that ARM trade that we talked about. It's actually way harder to sit through a big gain than it is a loss, for me anyway. I was very uncomfortable when it was up like $50 a share from my entry. I was like, what do I do? What do I do with my hands? I don't know. So those are the kind of things you have to do. That's why most people fail. You have to do the thing that doesn't make sense and is counterintuitive.
Yeah, and that's a big part of what makes trading difficult. It's knowing what to do, but still being able to do it when everything every emotion, every instinct is sometimes going against that from time to time. So that's great advice. And the next question: what's a great piece of advice that you have received?
Run your race, I think, is the best piece of advice that I heard. And the guy that said that is a man named Pat Walker. He's not the only person to say it. It's a pretty common phrase, but he's been swing trading for like 38 years or something like that. And he runs a service that I've subscribed to try to learn from him. And I find that to be really valuable information, because it's so easy to look at other people's success and what other people have done and compare yourself to them. And instead of focusing on just doing what you need to do to get to where you want to be in the time and the way that makes sense for you in your life. Like we talked about how I have 3 young kids. I can't work 100 hours a week. If I didn't, I would. I have the work ethic for that, but I don't have the hours necessarily. And so maybe it'll take me a little bit longer to get to where I'm trying to go than some other traders who are younger and don't have those commitments that I do. And that's okay. Like I don't have to get to where I want to be as fast as someone else did or in the manner that they got there. And for the most part, every trader that I've met has had a different story of how they got to be where they are and how they developed their specific strategy. Everyone does things a little bit different. So, you have to run your own race, stay in your lane, do what works for you, that makes the most sense to you, and don't worry about what everyone else is doing, especially on Twitter. My God, I mean, you can really lose your mind going through Twitter, people posting their P&Ls, and then you look at yours and you think, man, why am I not doing that? Like, I feel like I'm falling behind all those other guys making all this money, and all of that is irrelevant to what you're going to do to get better every day.
Yeah, I love that advice, and it's so true, and especially when you have crazy things running like the GameStops or whatever, and you hear people talking about the opportunity of a lifetime. It's like, well, maybe for them, but if it's not for someone else, if it's not glaringly obvious, then don't force it to try to be like, oh, I need to take advantage of this. And so just running your own race and being comfortable with missing out, being comfortable with staying in your lane, I think that's just fantastic. And the final question, what's your favorite things to do when you're not trading and you're not racing cars?
Oh man, that was so much fun. Although I don't get to do that regularly. That was a one-time thing. What we do often that I do really enjoy is going on hikes. I know it sounds very boring, but we have a lot of really nice parks around here that we can go for hikes with the kids, and getting off the desk and being outside on nice days. Those are the times when I'm happiest, doing those kind of things. They're very simple, but that's what makes us happy. That's my favorite thing to do when I'm not trading. It really, there's only so many things I do when I'm not trading. It's basically get up, study trading, do trading, spend time with the kids. So, and that's my favorite version of spending time with the kids. So that would be it.
Well, that's great. And on that note, I think this wraps up the episode. Ed, this has been fantastic. It's been great to talk with you, to be able to catch up, man to man. And I'm looking forward to seeing you in Vegas this upcoming year. And Judah will be there too. So maybe we'll all play some blackjack, or if Sam's around, we'll chug a beer together.
Yeah, man. Sounds great. I'm looking forward to it. Absolutely.
Thanks for coming on, Ed.
Yeah, thank you. Thank you for having me. Good to talk to you guys.
Thanks, guys.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.